I genuinely think that we found a severely underrated stock called Lennar Corporation with the stock ticker LEN. So how are we going to analyze this stock? Of course, as always, with my little Canva presentation that I prepared right now here. It's very straightforward, it's very beginner friendly, no useless chatting, no useless information, just like your useless university teachers give you. Here we go straight into the source, you know. So let's go. As a complete beginner, you generally care only about 6 things, okay? You care about the chart, profit, debt, money on the bank account, value, and price. So let's begin our analysis with the chart, and here we immediately have a little instruction. Chart has to grow for all 10 years. Okay, what does that mean? That means that we will draw here a little exponential line, kind of like this, as you can see on the screen. And then we will compare the actual chart with that line. So we can see here that the chart is actually following this line. It grows exponentially, of course, with a bit of pluses and minuses, but generally it follows that line. So that's an amazing sign to see, okay? Now we come to the profit. For profit, we also have here a little instruction. Profit has to be in plus and it has to grow. Okay, let's draw that little exponential line as well, kind of like this. Or nah, this is too bad. Let's make it again. Let's draw it kind of like this. And then we compare the net income, which is basically profit, with that line. And we can see that the profit also follows that exponential line. It grows through the years. So that's an amazing thing to see as well, okay? Now we come to the debt. And according to the instructions, the debt has to be low plus decreasing, okay? So let's take a look at the chart. First, we had a slight growth in debt and now a massive decrease. So that's an amazing sign to see, because you can see that the company is trying to decrease the debt, is trying to be not in debt anymore. You know what I'm saying? So that's an amazing thing to see. So debt is also very good, okay? Now we come to the money, and with the money, I mean money on the bank account. And they have to have more money than costs, okay? So now, how do we know if they have more money than costs? You just literally take a look at the bank account. They have $4 billion in plus. So that means that they have more money than costs. So that's an amazing sign to see, bro. That means that they are having like revenue in plus, that they are making profit. So that's very good. That's very good, okay? Now we come to the value, and in terms of the value, we of course want to buy stocks that are undervalued. Now, how do we decide that? We analyze two little bullet points. One is called P/E ratio and the other one is called intrinsic value. Now, as a complete beginner, you generally just want to figure out that the P/E ratio is lower than 15 and intrinsic value is higher than the price of the stock, okay? We will explain that right now together. So P/E ratio of Lennar Corporation is around 10, which is lower than 15. So this is what we want to see, okay? P/E ratio in this case is preferable. And now we come to the intrinsic value. Intrinsic value of Lennar Corporation is around $200. So that would actually mean that the fair price, based on some calculations in the background, should be $200. So Lennar Corporation right now, at this exact moment, should have a stock price of $200. But the actual price right now is $156, which means that the stock is actually around $40 undervalued. Because if intrinsic value is higher than the current price, that means that the stock is undervalued, okay? Let me write that here on the screen as well, is undervalued. So we can also see that the intrinsic value is higher than the price, so stock is definitely undervalued in both terms, okay? And now we come to the price, and the instruction for the price is very simple. Price has to be lower than 150 euros or $150, okay? So the price right now here is $156, so it's actually only 6 euros or $6 overvalued in terms of the price. So we will mark that as a no, okay? And now we come to the final evaluation, bro. And for final evaluation, we will just follow everything that we analyzed so far and then decide whether we should buy or sell it, okay? So in terms of the chart, is chart growing? Yes, it is. If you don't believe me, go like revert a bit and then go watch the beginning of the video. Do they have profit? Yes, do they have. Is debt decreasing? Yes, it is. Do they have money in plus in bank account? Yes, they do. Is the stock undervalued in terms of the value? Yes, it is. And is price below 150 euros? No, it's not. So generally, bro, as a final evaluation, we can see that we can buy this stock because it's absolutely amazing. The financials are amazing, the debt is decreasing, company is reinvesting the money back, it's undervalued both in terms of P2E and in terms of intrinsic value. So the only thing that I don't like is that it's slightly overpriced in terms of the price. But bro, definitely bro, put this stock on your watch list and maybe even start investing small amounts and then dollar cost average this stock into completely high profits, okay? So I will definitely put this stock on my watch list, and then maybe if it goes a bit lower, then I will buy it. So I'm very happy about that, okay? This is an amazing stock, so let's see what the future holds, okay? If you want to know more about stock market investing and self-improvement, follow my video, like follow my channel, subscribe, bro, because I'm trying to combine both of them and teach you as much as I can. Join me on this amazing journey, do the hard work, and see you on top of the world.